the heart of it, a move by China to weaken their currency, and then a response from the United States to denote them a currency manipulator. We'll break down all the details. For now, though, take a look at futures right now, and I can tell you we were a lot lower earlier following the worst session for U.S. stocks of 2019. The Dow and the S&P losing some 3%, the Nasdaq losing more. So the question is, why the turnaround? I think here it's the lack of follow-through on yesterday's currency weakness from China. What we saw today is them setting their daily currency fixing at a stronger level than feared. They also told foreign exporters the currency won't weaken further. This, of course, coming just one day after they allowed the currency to breach that psychologically important 7 level versus the US dollar. We are below that level right now, but it's stabilized, and I think this is key. The big question, of course, what does the United States do now? Do we see more tariff threats, a higher rate on those tariffs? Chinese state media has argued that it won't devalue to offset the impact of those trade tariffs. They also argue, and this is an interesting one, that this move is merely a catch-up, that other currencies hit by the trade war have weakened versus the dollar. Think of the South Korean won. It's lost over 8% versus the value of the US dollar year to date versus China's loss of 2.6%. I think that's a pretty fair point. We also should point out the challenge here for China, getting my C's mixed up. It's fine. They can weaken the currency, but the risk is that they spook domestic investors and they see capital outflows with people afraid that the value of their assets will fall going forward if the currency is weakening. It's a delicate balance. Let's get to the drivers and get some context. Christine Romans joins us now. Matt Rivers is also standing by for us in Hong Kong. Christine, to you first. Whatever you think of currency manipulation or not, the bottom line for global investors was they were looking at this and thinking, how on earth do you sign a trade deal under these conditions?
You know, trade wars are really hard to win, and guess what? They're even harder to stop. I mean, this is why so many people were afraid at the beginning of this onset a year ago of this trade war. And you look at stocks yesterday, and they're from the highs, 6% for the S&P, for the Dow, 7% from the highs from the Nasdaq. That is the bite taken out of what had been record highs by concerns that this trade war won't end anytime soon. And I've been saying this morning, Julia, there's really no end in sight. I mean, Goldman Sachs telling its clients that now, after this latest round of escalation, they don't expect the trade war to be over before the 2020 election. So where is their progress? I mean, at this point, there's a meeting, a low-level a meeting of the two delegations in September. That means trade headlines are going to be risky until then.
Absolutely, and you've got both sides here sort of gearing up for a longer-term battle here and a trade war becoming a currency war here. Matt, to you, the Chinese have said, look, we're not going to devalue to offset the trade tariffs, whether or not it helps ultimately. But the point they're making is that they're just playing catch-up, that actually other currencies in the region have weakened, and why shouldn't China's? I'd argue they've got a point here.
Yeah, I mean, that's certainly something that the Chinese government might look to. But, you know, your point right off the top, Julia, is really important, that the Chinese government is fully aware that a currency war, you know, is not going to be a good thing for China. Capital outflow in China has been a major concern for years now. There have been capital restrictions in terms of how much money you can take out of China, how much money the average Chinese person can take out of China for a long time now. In fact, here in Hong Kong, there have been, schemes, if you will, for a long time for ordinary Chinese inside the mainland to work with people here based in Hong Kong to try and get their money out. So this is something that China has been worried about for a very, very long time. And I think that's part of the reason why, you know, we see that the yuan trades a little bit lower in terms of in relation to the dollar in offshore trading. Inside mainland, the trading is a little bit more tightly restricted, and the Chinese government today didn't let it go past that 7 mark. And I think that shows you that the Chinese, you know, we have an article on our website right now saying China blinked first. And I think that's an apt description, because China knows that if it continues to let the yuan weaken to a major way, investors are going to get really concerned. They're going to have to fight those capital outflows, and that's not something they want to do.
Yeah, you make a great point. It's got to look controlled. You can let the currency weaken to some degree, but the moment it looks out of control, then you've got a real problem. Welcome to 2015. We saw the impact it had. Christine, the question is, if China did blink here, as Matt perhaps points out, what does the U.S. president and what does the White House do in response? Because if they threaten, as a result of now denoting China a currency manipulator, more tariffs, higher tariffs. Where does that leave us? Because they could add more pressure here. And ultimately, where does that leave the U.S. consumer?
There is another trench. I mean, this $300 billion that they put 10% tariffs on that will begin in September, they could go further on that, and they could tariff everything or tax everything at 25%. The U.S. Could. There's also, though, this interesting, I think there's going to be a fight over labeling China a currency manipulator. The IMF, Christine Lagarde, just last month said that China's external position is in line with fundamentals and desirable policies. So the IMF does not see that same view there. And there are those who are arguing this morning that calling it a currency manipulator was reflexive and sort of out of the norm for the U.S. They've been threatening to do this many times. I mean, the administration has had, 5 reports to Congress, windows in which it's supposed to label them a currency manipulator, and didn't. And this time doing so outside of that normal window, you guys.
Yeah, absolutely. And you've got the European Central Bank, you've got the Swiss National Bank, the Bank of Japan, all with negative interest rates, and yet China's the only bad guy around here. It's quite fascinating. Matt, let's come back to you finally. How does China handle this? Because if you said delicate balancing act, they've got to be very careful. But under these conditions, everything you know about the culture in China, the lack of willingness to back down here, can they agree some kind of trade deal under these conditions?
No, I mean, I think there's no way that we're looking at a trade deal anytime soon. The next time that they're going to meet is in September. I don't think anyone is going to be optimistic that there's going to be some sort of substantive deal struck there that could lay the groundwork for some sort of signing ceremony between Donald Trump and Xi Jinping. I think you saw China allow its currency to devalue to a certain respect. To send a message. They're not going to, commit economic suicide by letting it go too far, but they are willing to fight this out. Everything that we're seeing in state media, everything that we're seeing in public statements from the Chinese government, they are ready to dig in on this issue. And it's worth remembering, we are not far away from a U.S. election in which President Trump certainly stands an even chance of losing, if not a greater chance than even. We don't know how that's going to play out, but the Chinese government could be betting that maybe the next president doesn't really want to take on China in the way the Trump administration has. They're not going to campaign on China the way Donald Trump did. And so they're going to wait this out. Remember that the Chinese government does not plan in months. They plan in years and in decades in a lot of cases. And so maybe they're looking further out. They can ride this out. They feel their economy is okay for now, and they're digging in. So a trade deal, the optimism over a trade deal is way lower than it was even last Wednesday.
Yeah, zero-sum game. Christine Romans, to your point, trade wars are not easy to win and everybody hurts. Christine Romans, Matt Rivers, guys, thank you so much for that.